Good evening. Ira Epstein, and we are now with your financial market wrap-up, and the evening is for March 21st, 2022, about 6:25 p.m. Central Time. Interesting day, but before I get to that, we're going to have my live webinar this week, and it's going to be Thursday. I open the doors to it at 12:15 p.m. Central Time. There's no charge to attend. I begin promptly at 12:30 p.m. I end promptly at 12:50 p.m. I do not post the recording of this anywhere. And the reason is I want you to attend. If you don't want to attend, I'm not interested that you missed it. Clear your schedule. I make the time out to do these. You join them. So how do you get your link? Well, I already sent it out if you're in my mailing list. If you don't see it in your junk mail or in your inbox, you're not on my list. Call my staff, 866-973-2077, or better yet, take your cursor, move it right on up here. As you do, an icon's now going to appear. And on that icon, click it, fill out the form. That is your registration form. Once you complete it, you'll get an email confirming that you're registered. I also have in that my email address. Click on it. You'll see what opens up is going to be an area for you to write me questions. Write me the market you want me to cover. Give me a couple of days now to create the charts, and we'll have a ball with that. All right. So Fed Chair Powell spoke about noon today, and the market was hanging, obviously, on every word. It's interesting what happened. The stock market, which was down pretty good, recovered a bit of that. It still was down in most of the markets, most of the indices, but it did recover. What didn't is the bonds and notes, because he said, as he should, if the Fed thinks they're not being quick enough on these hikes, they're going to speed them up. That doesn't mean they'll do more because the market's already building in one every single month into 2023. It means they'll double the pace to a 50-point hike. So the market's looking at that. Down you go in the bonds and notes. At first down in the stock market, then back a little bit. But I'll tell you the market that I see here. The inflation market still likes the gold, the silver, the copper, XME if you're watching the miners. That's where I think the money is. I think that these rallies in the stock market are going to fail. These rally attempts. Why? If the Fed is determined to fight this inflation and get it down to 2%, they're going to raise rates. Raising rates, number one, is certainly not friendly for NASDAQ stocks, which are intensive of capital for that. That's the traditional thinking. And it may not be good for other parts of the economy when you raise rates that much. That's what you have going on. When you look at the S&P, where I'm looking for a failure, and it doesn't have to get back up here, would ideally, though, be the 4,500 level. Okay, are you far from it? You're 50 points away. You can get there. Not that far. When I look at how the market's extended itself, okay, you managed to clear this area back here. See that? You had the stepping ladder down. I think you'd agree with that. You didn't challenge the February 24th low. Some traders might, as chartists, say, well, that's good enough. You got a triple low in place, and maybe that is the low. I can't argue that either. I can see that argument as a chartist. And here comes the market back to the upside. When you put on, where's the swing line? You're not trending. An uptrend is defined as higher lows, higher highs. You have in price format a lower low, and then you took out this rally high peak right here. That's not a trend. It's a vertical price rise. Where's the market headed? Often it's either the Bollinger Band or moving averages, or the combination of both. So as it cleared the 18-day average, the first major number of resistance, and it's a big one, the 200-week moving average of closes, but the one the market has really failed at more times than not recently, because you can count the failure since February, has been the 100-day. So it's between these two numbers that I'm looking for the resistance, and then I cap it off with, oh my God, you got up to the Bollinger Band on Friday and today, and you keep falling back from there. I've got all the resistance points I want. Again, I don't see an uptrend. I see a lot of resistance, and I'm looking for a pattern to develop over time that throws out sell signals, because that's where I think the bigger money lies. When I take a look at where the slow stochastics are, they're up, but overbought. So I have an overbought market that's at the Bollinger Band and the 200-day average, and maybe it wants to cap out at the combination of the 100, but I think this area is where a lot of traders are buying puts. You heard me, buying puts. In the NASDAQ, again, overbought. You went to the lower band, what'd the market do? Bottomed out, take my enhanced Bollinger Band course, and you'll say, Ira, the best money I've spent to learn about Bollinger Bands. A whole field I'm going to open up to you as to how pros use these things. Coming up, I look for a failure up there. If it extends, I've got the other two moving averages waiting. I don't think you're going anywhere. If you're getting bullish here, how big of a rally are you looking for? Do you honestly think you're going back to contract highs in this environment? It could happen. I'd be a fool to say it can't happen, but I'd probably be the most amazed chartist on the planet if it did. Guess what? The Swiss cheese man. It could happen to me at any point. You know what I mean by Swiss cheese? How many times I've been wrong. I'm honest about it. Most people aren't. I'm also right a lot. So I have a kit that's hot, and it melts the holes in my Swiss cheese. Covers them up. Okay, so back up to the resistance in the Dow. I'm looking for a failure between right here and the 100-day average of closes. And again, I think put writers are going to come out of the woodwork. In the Russell, you went from lower band to upper band. There's no trend there. This is just what I call that professional walking. I was on BNN TV, that's Bloomberg TV in Canada. And I was on there today, and Andrew Bell was the host, and I've known Andrew for I don't know how many decades. I've been on with a long time with him. And he asked me a question. He said, what do I like? I said, nothing. And we were talking. He said, you're all right. That's the first time he ever heard me say that. And I said, these are too rough. I don't know how to control the risk in these markets right now. It's a day trader's delight. What do I mean by that? The guys that seem to be doing well are the guys doing the in and out trading during the day, and they don't worry about when they wake up in the morning, things are a complete different way. It's not what I like. I like swing trading much more, which could be I buy or tell my customers to buy now. Maybe they'll get out a week. Maybe they'll be out in 5 days. Maybe they'll be out 3 days. Maybe they'll be wrong right away. But it's not about, hey, we're going to buy here. You're going to get out there. You're going to buy here, get out there. I've tried that. It's very difficult to do. But I must tell you, I'm watching my clients and I'm getting pretty impressed. They're doing a heck of a job. And they've got ranges where they normally don't have them. The key to that is big moves. And you have them galore. In the cash, I do think the pros began writing, and I said this the other day, I think they're writing right now puts, looking for the market to reverse course to the 30.05 level. Right? You haven't embedded, you're just terribly oversold and into big support of the 100-day average in the lower Bollinger Band. In the T-bond market, you're embedded. That tells me that each hard rally is going to get sold by the pros. They're still looking for these markets to come down and down hard. Same with the 10-year note. Dollar index, lower highs, and now, what about this? Is that a higher low? Well, let's just look. That low on that day was 97.71.5. The low right here was 97.78.5. So we have lower highs and lower lows, but you're over the 18-day average. One of two things. Close under the 18-day average, the bears come out of the woodwork, but you need to close under it. Take out 98.63.5, and you get I think a buy signal is generated on the chart, because then you'd have higher lows, higher highs. You've already corrected on the downside from being overbought. Interesting. Eurocurrency is saying right now, hey, I want to be short this market. Why? You got higher lows, higher highs, but you're under the 18-day average. So what would trigger that? Hey, I want to be short. See this low right here? This 110.37, this stays low right there. Is it 110? Yeah, 110.37. I think if you clear that number, the pros will hit that market, stops back over this high. I'm giving guesses. I don't know, and these are not trade recommendations. And then they open the door up for a move back to the 108, let's call it 50 zone. British pound. When you lost the embedded reading on this day, to me, that said, the market's probably going to make a run at the 18-day average of closes. Again, if you've taken the enhanced Bollinger Band course, you understand what I'm saying. So I'm looking for that to be hit. Well, I'll be a son of a gun. Today it gets right up there and fails as it should. You're not trending. This has been a contra-trend rally, as it turns out, failing against the 18-day average. You wait for it to give you a new setup. Bitcoin, the trend is down, the bias is up. You're over the 18-day average, but you do have the lower high pattern, and I believe it's lower and low too. This low right here, I can't get to it on this, but when I put on my cursor, I believe it was 38 and a quarter, something like that, 38,250. But that's what I'm looking at. To get friendly the market, you got to start clearing this rally high from just the other day, which was 42,350. So watching, don't see a trade set up yet. Now we get to the differential between Brent and WTI. So it had gotten up around the 8 and a quarter level, corrected to about 4 and a quarter, and the battleground, you're on it right now. The 18-week moving average of closes. If the market can settle over that, it means Brent will be gaining on WTI. If it falters there and comes down, then the two prices contract as WTI gains on the Brent. So you're at no man's land right now. And when I look at what you're doing in the market, the high tonight is 117.44. It's a nice rally, but you still have a pattern of lower highs, lower lows that found its way to support here. Now, you want to talk insanity in trading. You got up here into the 137 area, you break down to $97, and from there you just rally $20 like it didn't exist. And you think you can catch that. I hope you can. May heating oil is very similar. Lower high, lower low. I passed on the WTI. I didn't mean to do it that fast, but a downtrend here. The key is to take out 110.91, and you just did it as I'm talking to you. So now you have a higher high and a lower low. It's not a trend, but you're out of this correction phase. You're just not into an uptrend yet. As I said, in heating oil, you've got no trend, but you have the upside bias. And in nat gas, you would hit the upper Bollinger Band at the 50, what was that, the 503 level. The 18-day average would be support if it wanted to drop back there. It made a run at it, couldn't quite do it today, and tonight the market's still trying to go up. Now, natural gas is still flowing, by the way, through Ukraine, the pipeline from Russia into other parts of the Eurozone. I saw the chairman of that pipeline on TV on Bloomberg maybe 30 minutes ago, and he said that the amount of natural gas is about a third of the norm. The monies are coming in. Not every bank has been sanctioned in Russia, and the ones that aren't are making payments through that. You know, again, so much of this is propaganda. You do understand that. You think all the banks in Russia are sanctioned by the U.S. and NATO. They're not. Well, European members. It's not. They leave enough there because you got to have energy. Now, people want to see the energy supplies cut off from Russia, and they are working feverishly to get it done in the Eurozone. But if this doesn't happen overnight, they've got to find ways to do it. You are aware that even as Germany is signing deals with some OPEC members for natural gas, they don't have any natural gas ports. They've yet to build them. That's why it's nice to hear all this. It's called propaganda. And it's so hard to read through it because you would think, they're doing a deal. They're going to get their natural gas. And I'm going to go, how? The only pipelines that come in there are from Russia. Figure that out. Now, what they can do is get a little rougher on the wording because spring is here. And with spring, natural gas use does this until we get to a hot summer, right? So that's where we're at. President Biden is flying out to Europe to meet with all his counterparts there. They'll come up with some statements, but again, they're not stopping Russia. And Russia, and if you read tonight's New York Times, is talking about a limited nuclear weapon. At least the New York Times is talking that he may use that. In other words, a small nuclear bomb, very contained, but what does that do to a city? Ideas you got to think about. I'm not making this up. It's in tonight's New York Times. I'm Ira Epstein. I hope you all see me in the webinar. Again, you can call my staff. You can click up here, and I'll see you tomorrow.